Mr. S.L. Narayanan is Group Chief Financial Officer with the Sun Group. He's joining us on a phone line from Chennai. S.L., thanks very much for your time. Must say you're a hard man to get to. And it's a pleasure to welcome you on the show. Prashant this side. So I just want to start straight by asking you about the ad revenue decline in the fourth quarter. 6% fall in ad revenues. What happened, sir?
Yeah, see, basically, we were still, recovering from the aftermath of the floods. So we have always been too dependent on some of these FMCG brands which spend a lot of money in the run-up to the festival season, all the way from Diwali through Christmas, New Year into Pongal. So if you recall, towards the end of November, the rain started falling very heavily and the city was almost dislocated for all intents and purposes through the month of December. And at least till first week of January, most parts of the city were still underwater. And many of the large advertisers didn't have much inventory to sell because most godowns were underwater. So in the absence of anything to sell, there's nothing to communicate. So we had a very, very deleterious effect on the sentiment on spending. And that's really the reason why, we had this impact. But despite all this, if you look at the full financial year, we have grown ad revenues by about 6 points.
Sorry, full year growth by 6%?
Yeah, 6.57%. My memory serves me right.
Okay. So you said that you're overly dependent on consumer companies for advertisements? And that's one big reason to explain.
If you look at the revenue basket of the ad revenue basket of Sun TV, almost about 55% comes from the national FMCG companies, which is basically toiletries, personal products, staples like processed foods and edible oil, and then we have another third coming from very large regional brands, which are the jewelry companies or services manufacturers or, local ice cream brands, local edible oil brands. So, together between the national FMCG and the local consumer product companies, we are looking at something like close to 85-86% coming from that. And they tend to advertise in spurts, and there's a lot which gets linked towards the festival side, especially if it's a new kind of a mobile phone or a new, consumer durable. So that's the reason why, we had this impact.
Yeah. But if we look at the ad growth outside of Tamil Nadu as well, that also has seen a pretty sharp decline, right?
No, actually, we don't segment that into that kind of fine detail. Tamil Nadu continues to be the most important, because if you look at the total South Indian advertising market, almost about 40% comes from the state of Tamil Nadu, and about 10% is from the state of Kerala, which leaves about 50%, which is slightly more towards Andhra, Telangana, and less towards Karnataka. So it's not very easy to slice and dice this and look at what part is moving and what's not moving. And very often even these regional brands tend to become South Indian brands. I mean, what started off as a local metro brand and becomes a Tamil Nadu brand, and then they start. I don't want to name names. There are lots of jewelry companies which started in Kerala, and now, they've become international. But in that process, they went through, the neighboring states, then became a South Indian brand, then became a national brand, and now they started opening stores in nearby countries. So it's a very different way we look at this whole, market. And it's not possible to segment this genre-wise and language-wise and try to make some sense out of it. And also we have these deals which are negotiated across the markets.
You know, some of the figures that you gave, 40% from Tamil Nadu, 10% from Kerala, others from Andhra, etc., those are for Sun TV or, I mean, the total pie, ad revenue market in the south of India?
We don't disclose what we make, but this is based on, some of the industry reports that are publicly available.
Sure. You also took a price increase, right? I mean, ad rate hike.
No, not. It is very selective. It's not something which was implemented across the board. Very selective.
I've got a Kotak report, Kotak institutional report, which says that there was some resistance to your ad rate hike of 19% as well.
I don't know what date he's referring to, but to the best of my knowledge, I don't think they've increased rates by that extent. It is perhaps the ones that was done much earlier. So I really don't know what date is being mentioned there.
It could be earlier, right? Could be earlier, and then, I mean, because floods, etc., the outlook was weak, so maybe, I mean, that's what he's referring to. Possible, right?
Right.
50%, I mean, Sun TV's ad revenues are about 50% of the overall revenue, Sun's ad revenues, group's revenue, sir?
No. We are talking only Sun TV Network Limited. That's a listed entity. What's the group revenue?
No, the DTH cable, etc. I'm saying the total, is...
Ad revenue.
No, we're talking about Sun TV, right? All the numbers that you gave were all for Sun TV, right? The flagship brand, the channel.
We don't break wise. We give only the consolidated. We don't disclose what's the revenue channel wise. We only disclose what's the total advertisement revenues on the network and what's the total subscription revenue. Subscription revenues, we break it down between DTH, cable, and overseas.
Okay. What is going on right now, SL, in terms of have things picked up, or because you already have 2 months, you're already 2 months into the first quarter, right?
We have. In fact, we had even indicated sometime in the last quarter that the after effects of the floods will be felt well into the month of January. So we were looking forward to a muted quarter anyway for March. But post-March, things have definitely started looking up. I think there is a little bit of a momentum in the economy. The numbers that are coming up are quite heartwarming. And some of the proxies that people generally use, like, auto sales, two-wheeler sales, LCV sales, all of them are looking. I just saw the data from some of the top motorcycle manufacturers and truck manufacturers. So there is certainly a step up in the level of economic activity, which then rubs off onto media companies, because that's what really drives spending. So I think this year should be a lot better than last year for us.
I mean, could you give us any outlook with numbers? Could be a broad range as well, or not to be specific, but anything from 6.5 and 16. What could be ad growth in 17?
It is, if real GDP growth is around 7% and inflation settles down at 5 to 6%,
real
it
GDP
is reasonable.
Around 8% SL.
Yeah. So I'm just moderating a number. So I think it is reasonable to expect a nominal GDP growth rate of anywhere between 12 to 15%. Real GDP growth inflated by the inflation number. And there is empirical data to suggest that, ad revenue growth has at least kept in pace with nominal GDP growth, except in some years in which, the rate of growth had fallen below 5%. So I think overall ad revenue should grow at that level. And we would like to target a growth rate which is higher than that, which should be within the realm of possibility. I mean, I can't tell you what number we will precisely grow at. But the macroeconomic indicators seem to suggest that we are on a good ticket.
I mean, so last 3 years it's been between 8 and 12% or so. So upper end of that range, SL, or you think it could be? I mean, you obviously would want more, but realistically,
Yeah. So That's why I'm refraining from putting a precise number because I don't want to be exposed to a charge that I'm putting out a forward-looking statement because we don't normally do that. We don't put any EPS estimates, no revenue estimates. We just give a broad indicator as to the conditions in the market. There were challenges in the quarter ended December and in the quarter ended March. So, we had very clearly indicated at that time that, these are challenging times. It looks to me that those challenges are away now, and the market looks poised for a very good recovery from these levels. What we would deliver is something that, frankly, I won't even be able to tell you the number even if I tried. So, there's lots of ifs and buts here. So, let's leave it at this. I think, the condition is very conducive for a growth from where we left off in fiscal 2016.
There's always a huge focus on, and I'm sure you're aware of this, although you, I guess, disregarded, but huge focus on the political arithmetic in Tamil Nadu, and people link it all the time to fortunes of companies there, yours included, yours especially, actually. Any thoughts on that, SL, with that kind of talk, that kind of analysis which people do? It's not really analysis with hard numbers, but just, talk.
As somebody said, I think it was Disraeli, the statistic that lies, damn lies in statistics. So somebody was trying to put a correlation between the years, one party was in power and what happened to Sun TV. These numbers are extremely misleading. We would like to believe that, we run this company based on some very prudent principles, conforming to the highest in terms of professional standards of execution. I really cannot comment on, what are the implications of a certain party coming to power or a certain party not getting elected. I really don't have that competence. What we really know is how to drive top-line growth, how to control costs, how to improve margins, how to improve return on stockholder equity. I wouldn't want to say anything on the political dynamics.
Fair enough. Some people who track the company have said that, our newer, not newer channels, but channels like, I think, Raj TV, correct me if I'm wrong here, but Kalingar TV, these are channels which have, started from nothing and picked up market share of 20-25% in that market. Is it any thoughts on that? So, they're eating away, of course, into you. You're the leader.
I think the data that you quoted is not right because I think the nearest competitor for Sun TV is another Sun TV channel called KTV, and after that comes Vijay TV. Sun TV as a network commands almost 60% of the market share. And this data is all public. It's there on the Mark website. So the number that you quoted is widely off the mark.
60% market share in Tamil Nadu, right?
The viewership, if you see, it's all measured in terms of TRP rating points. So if you look at that, in fact, in terms of those measurement points, when the Park survey got extended to a wider market, Sun TV came number one all India. It was ahead of Star Plus. So
I saw that, yes.
Yeah, it has a very, very strong positioning. And if you look at the gross rating points nationally, it is first Star, followed by Z, and third is Sun. So as a bouquet of channels, it continues to be number one in Andhra and in Karnataka and in Tamil Nadu. It is not number one in Kerala, even as a bouquet. There's a lot of work to do in that market. But if you look at the GEC plus movies plus music plus news plus other genres like animation, we continue to be number one in both Andhra and in Karnataka.
The 60% market share is, GRPs in Tamil Nadu, right?
The nearest competitor is, I think, Star.
Sorry. The audio dipped there. Could you repeat that? What was that?
Yeah, the nearest competitor after Sun is Star, and I think they hold about 10%. See, I don't have this data on top of my head.
Sure.
But it's all available on the website.
Sure. The subscription side, how are things doing? I mean, what are the figures? For 16?
We saw an acceleration towards the end of the financial year. We grew by almost 15% in DTH. And if you look at the overall year, DTH revenues have climbed by 12%. We think that with the digitization getting support across the markets, with phase 3 and phase 4, getting into execution mode, we will see a fairly strong uptick in subscription revenues. Now, we still have some stumbling blocks in some markets where there are stay orders. But if past experience is anything to go by, the stay orders generally get vacated over time, because the consensus view is digitization is good for all stakeholders, because the analog system is not something which is socially also desirable, because much of that operates outside the tax net. With digitization, there is greater inclusion and there's greater transparency. And the people who really create value across the food chain get their due share, because all these ills like underreporting and other undesirable activities, can get completely eradicated. So in that sense, we believe that digitization will get the support from the authorities, and all the stay orders will get vacated in due course. And that will certainly, give a shot in the arm for our subscription revenues. And we are very optimistic, given the kind of popularity of our content. Wherever South Indians live, we will be, a medium of choice. So even without any kind of push, the customer pull will ensure that our subscription revenues, continue to stay buoyant.
Sure. SL, I think you must have looked at this report. I'm just putting up a graphic. I don't know if you've got a TV screen in front of you, but this was a Bank of America Merrill Lynch report, I think, and this was, in the middle of May. They'd come out with a comparison between Zee and Sun TV. The graphics are on your screen. I mean, over the last 5 years, the Zee stock is up 230%. The Sun TV stock is actually lower compared to where it was 5 years back. They look at ad revenue growth, subscription growth, margins, and a few other things as well. And of course, valuations are, from a stock market perspective, PE basis, EV by EBITDA, etc. Sun is extremely cheap. What can you do to kind of sort of do better in this regard, shareholder return, SL, really? I mean, to improve this, because you got the numbers in terms of viewership, very strong franchise. What can be done?
Exactly the numbers, because at the end of the day, valuation is a function of, the kind of confidence with which the market, buys the stock. And that's something that, no individual can influence, because at the end of the day, this is something which is given by the market, where there are lots of buyers and sellers who are acting day in and day out. But what we certainly can do is to improve the rate of revenue growth and the rate of profit growth. So that's where, for whatever reasons, I mean, if we really go into details, the loss of the cable TV business in state of Tamil Nadu, because we were getting almost 120 crores in terms of Tamil Nadu cable TV revenues, and that has fallen to about 30 crores post, takeover of the distribution business by RSU. So that was a major impact in subscription revenues, which happened in 11-12. Which was the only movie that Sun TV produced. So that had an extraordinary, income embedded in the reported profits of fiscal year 2011, which didn't happen in 2012. So if you smooth out all these, you will see the real reason why, the stock has underperformed. I mean, I'm not for a minute, defending all these numbers. I'm sure we can do better. And that's what we have set out to do. And these things are done over a long time. There are no quick fixes. we know where we need to, focus on.
SL, I know just one thing. Now, this Kotak report, right, I have in front of me, it says Sun management can regain investor confidence by linking directors' remuneration to growth in profits on market cap as against the current norm of 10% of profits before tax. So this is a specific recommendation which the analyst at Kotak is saying can improve investor confidence. I understand you're saying focus on revenue and profit growth, etc. That's obviously great. But something like this?
No, that is not for me to comment because it's something which is to be considered by the board. I mean, I don't fix compensation for the management. So, but these things are all, well understood and well articulated in the past. And so it's not proper for me to discuss this. I think we should stick to the quarterly performance and not get into policy issues. I certainly am not authorized to discuss.
Sure. SL, thanks very much. Thanks for patiently answering all those questions. Good luck. Appreciate you joining us this morning with that.